Hello guys, welcome to my new YouTube video. Today I'm going to show you how to find risk and reward and how many share you need to trade in the specific day that you're what to say looking. So let's get into it. I'm taking AMC because this is the hot stock last 2 months. So I'm going to June 2nd. Let's go. I'm using Webull for this. Webull is free uh, and it's live. This is very good for trading this website. So you can see I taken this day. Uh, okay, 6-2. I'm taking 6-2. So when you're trading, you see a huge running and 2nd of June, and you think, okay, I can short this stock in uh, third day, next day, I mean. So you need to find the resistance in previous day, that how many buyers are over there. So it's a continuous running runner. So when a stock is continuous running and it's have a lot of volume and it won't fade and it start to consolidate, that means there is a lot of new buyers are coming into this stock and new sellers are coming into stock in this stock, or the buyers who bought here like 14 or 43, 45 or previous day. If previous day had high volume, yeah, this 2 million, lot of volume and previous day. So all of that people who see consolidating, when they see consolidating, they also start to take their profit by small. So that's also make the stock won't go up and the stock will come back down. Then again new buyers gonna come, again it go up. So what basically happening here is new buyers are coming and it's consolidating. People who bought in this low level are taking profit, and another thing is short seller is also coming on this stock. There won't be that much short sellers because why not? Because the stock is very powerful and there is a lot of volume is coming. So short sellers are really fear that it's gonna squeeze them. So I think in here there is a lot of buyers. So in next day the pre-market, you can see the pre-market is going up, going up, going up. When on morning 7:05, you can see there the people who bought here, they're looking okay, the stock is going up, they are in profit. When they see huge down candle, all of them are now in loss. On red, that means minus. They are, all of them are profit over here, but now they are in loss. So and this is a huge candle, huge candle in a few minutes. So this is they're gonna be really frustrated by seeing this because they were on profit. Now when it's coming back up, the people who can access the pre-market, some broker didn't allow you to access pre-market like Robinhood. When if some broker should, so people who bought here try to cut even, uh, in some this area, that's why coming back down. So when it open, you can see a little bit push, then the people who bought here gonna confirmly they're gonna sell their buy. Why? Because there is a lot of buyers over here, then they see a stock going up again, and suddenly a big red candle coming in very few minutes, that make them very nervous to hold this joke anymore, and this joke already ran so much. This overextended. You can see this joke is now one in 2 days in 118. That's very overextended. When it push up, the buyers over who bought here and holding here gonna sell. That make huge selling pressure. You can see that selling pressure is very huge, and the a lot of short sellers gonna come in also. That make this come back down again. When it come back up again, buyers who bought here, they're gonna cover. That's why this happened. And after all the it will fade almost, will fade something like, how much percent did it fade? Almost 100 percentage. Yeah, it's almost faded 100 percentage because it's a big gap. What really happened in a big gap is when a big gap fade more than 15% or something, like, it will bounce back even harder. uh, when it bounce back harder, because it big cap will bounce back eventually, they won't gonna fade like low float. If the float is 2 million something like that, the stock won't bounce back. uh, if there a very good news, then only the low float gonna bounce back, or else it won't bounce back. I see a lot of trade happen like that, and if big cap, it will bounce back. That's what happened here. Okay, now when if you think okay, when we trade this day, let's see, I shorted, I want to short this push over here, make it yellow. Okay, so where should I risk? That's the main question. So we need to see a lot of buying or buyers holding position. So a lot of buyers holding this level, so we can risk this area, this top. If it start, if we try to break up here, uh, we we can cut. Okay, we can cut, and that's the risk. And the reward is, I take more on this kind of this, I take Fibonacci. And reward is I will mainly take reward in 15 and 61. 61 probably. I will take my reward in 45. So let me put the reward as green. Okay, now you can see the risk and reward is very good in this. So now if you want to risk $100, so now you can take the calculator, type 100. Now what you need to do is need to find how many dollars were in this. So in this risk and entry, so there is $7. So you need to 100 divided by 7. That means you can only share 14 trade. Okay, if you risk let's say uh, 2000 $2000, so 2000 divided by 7, you can trade 285 shares. So if it's hard to borrow, you can borrow 300 shares in market, and you can enter by this bonds 285 shares. So I hope this will help to some people out there who are looking for this kind of video. If you like this, you like and subscribe, and leave a comment for new video. You can ask me any kind of video, I will provide. Thank you guys.